Hi guys, and welcome to the first members only video where I'll be going over trade setups both for London and New York for EU. Now, if EU on a certain day does not have enough setups, I will look at GU as well, and then maybe have a conversation on the trade setups for GU. But nonetheless, I really want to go into depth in explaining what the trade setups look like, why am I taking certain trades, explain the reasoning and logic behind those trades. So let's get to it. What do we have here? So coming into New York, and this is the 18th of June, we had a number of opportunities playing this entire downtrend, and then we had a couple of opportunities here as well. And then we'll look into some opportunities between the London lull period, right? So we call this the lull period because it is after 2 hours, and this is typically when price actions or volatility slows down a little bit and we have low probability setups. But nonetheless, we do get interesting setups, and oftentimes when you take them, they are winners. But again, a lot of confluences would have to be stacked on your side for me to take a trade in the lull period. Okay, so let's start looking from this side, and then we'll follow each candle as it develops, right? The first candle, and I will start working on this. Let's look at this one, right? This is right before London opens, pre-London, and I want to look at how the structure is playing and would I be interested in this trade. So the way typically and you've seen the markups that I do, is I would put this box around the prime candle, which is the first 15-minute candle, and I will also engulf the second or the echo 15-minute candle, which I intend to trade. And the reason why I do this is because it makes me strictly focus within this box. So I'm not interested in anything that goes around this. I'm only interested in this box, and I am laser focused to see where my trades are setting up. Often what I've seen in markups is that people will only do the first candle, and this is fine if it makes sense, but then a lot of price action happens here, and then oftentimes am I on the edge of that the second 15-minute candle has a new candle opened up, and then I start making narrations that really isn't aligned with the strategy, and we all fall prey to that. But I would advise to cover both the candles and then start focusing within this. So when I set this up, there is nothing going on, right? So if I zoom out a little bit, the structure is bullish, yes, but the internal, so here is the structure, break of structure, pullback, break of structure. So it's a bullish structure, and this is the last low. The swing in my case is bullish, and then we have this internal structure coming in bearish, goes up, now it has become bullish, now it has swept. But for me, there is nothing really interesting or exciting that I want to trade. This would be the zone, but this zone was broken itself by this giant bearish candle. And if I see long bearish candles like this, typically this is manipulation, or these will get run very quickly or retraced back. So why take the risk, right? I want to look at high probability setups that I've seen time and time again, and I know there is an edge. If I see that setup, I will blindly take those, and there are some setups today that I will go in depth. So let's move on. What happens next? We have this massive candle, and I would be definitely interested in looking at what let me get this, what happens here, and see if we got a trade setup. Okay, so this low, let's look at this. This is not the low. This low broke this high and then got swept. Let me zoom this in for you guys. First of all, let's talk about the zones right here. Now, for me, this would be a valid zone, and why this would be a valid zone? This is a valid zone because there has been an exchange of sellers and buyers within the zone that has made the buyers win over the sellers and their orders pending. Typically what happens is that in this areas where you have the sell to buy or buy to sell wicks, a number of orders are there, but these areas are basically on a lower time frame order blocks, right? If you go into 15-second or 1 second time frame, these would be order blocks, and order blocks, we all know, you have aggressive price movement away from them, which it did. It had a fair value gap. I don't look at FVGs, but there is a fair value gap over here. And if the wick had broken this zone, then I would not be interested, because that would be the end. This low should be strong and it should have a reaction. If this low got broken, then there is no premise to my trade. We are going to the downside, and the next zone is probably here. And the reason why I say this is here is because it swept the previous low. So it is a pullback and then a push upwards, and then you have the massive bullish candle on the 1 minute, right? So you tell me now, is this enough of a strong liquidity? And when I say strong liquidity, right, what is the intent of this? We are talking about inducement. Now, inducement means that you're trying to induce buyers or sellers into entering into a trade, which are then going to be run by price action, right? So you're trying people, inducing them into those areas. Now, how many buyers or sellers do you think will get induced in this area? For me, this is very efficient price action. When I say efficient price action, what do I mean? That every candle has a trend within it, and within that candle there are zones. So price typically moves from zone to zone. There is an order block, there is an origin, there is a flip, all within any candle. Take a 15-second candle and there'll be 1 second zones in it. Take a 1 minute candle, there are 15-second zones. Take a 15-minute candle, there are 1 minute zones in it. And price will typically move from zone to zone, meaning from the origin of the previous candle to the order blocks of the previous candle. That's where the orders lie. It will tap into those orders and then aggressively move away. Yeah. So this to me is not inducing anybody to get involved. It's just messy price action and it's efficient. Did any low outside of that break the high and then get swept? No, in my opinion. Everything is pretty, all the lows are respective. No low got broken. No, all the highs are being broken. So this is an uptrend. There is no low that breaks the high. So when price moves in over here, I'm not really interested because there is no strong liquidity, and that's that, right? So there is no trade over here, and we move forward. So what happens next is we look at, let me draw a box right here. Let's look at this. Okay, so what happened here? I am going to, yeah, so let's look at this, right? Let's study this. Let me delete this one. Let me delete this one. We'll come back to that, but let's look at here. So what are we seeing over here? We have a nice strong bearish candle. It broke structure of some level to the downside. So this is that point which I am pointing at, this wick edge over here, which is this. It's a structural low, but this low is weak because this low was not able to put a new higher high, which is over here. So if I had broken this high, this would have been a strong low, right? So it is a weak low because this low did not create a new high. So we are expecting it to get run. So once you are expecting it to get run, now you are creating the smaller internal bearish structure. And mind you, we always want to trade the immediate structure, right? So there is a strength structure, which is the larger moves on the 1 minute chart, which sometimes is the internal structures for other daytime traders who are following the 1 minute or the 4 hour trading mechanisms and different strategies. But we are looking at immediate action, right? So even though this is overall a bullish structure setup, right? This high got broken, this is strong low, this low did not get broken, and all this is internal. I am interested in following the internal structure because that is the immediate price action that I want to catch for the next 15-minute candles range. Yeah. So let's see. We developed this. Everything to the right has not been printed yet. The first thing what I do, I look at what has already been printed and I'm looking at where my zones are. So this is my zones, right here. Now you tell me, why is this my zone? That seems like an efficient price action, right? I need a pullback, but look at where are we coming from? Is that zone created from a reaction from another zone? So is that a flip zone? And in my opinion, it is a flip zone because this is a zone for sure. And I'll come to the bottom also of it. Price went up in, went down, pushed away aggressively, did not close above, did not break the structure, just wicked on top, grabbed the liquidity and fell back. Now, it did not immediately fall or break this demand zone completely. It had a reaction and then it flipped. So this becomes the flip zone, basically, because it is a reaction from the previous demand. And now that demand has been flipped into supply. So now I'm waiting. I'm waiting to see if no strong liquidity has been taken. Actually, it has, in my opinion. You have this high that got swept right here. Yes. There you go. So this high broke this low. Yes. Once this low is broken, then this high got taken out, right? So for sure, there is clear strong liquidity taken. Now, ask me if it is enough for strong liquidity. Well, there is definitely some orders over here. This is a supply zone that has been created because of this. And there could be people that would be looking at, a structure has formed, price aggressively moved away. I'm going to tap into this and see if it goes down. But then they get run out to the more high probability zone above. And then we place the entry at the breakout of this candle here. And we probably cover the high of that zone. And guys, I don't do anything below 3 pips or 2 pips. Sometimes I see a 2.4 pip, 2.5 pip. Spreads are enough to take you out typically, depending on your broker. It's better. Don't be a dig for a pip. So right, 3.3 pips is plenty good. And then you write the trade down all the way. Would this be a break even? This is not a break even because it went to 0.79. I do a break even at 1 hour. So I let it open, you leave it open, and then if it goes and turns the other way, so be it. It is a textbook entry. But in this case, obviously it ran down. So this would be a 2-hour win in my case, in any case, right? So let's put this aside.